Time now for an in-depth look at the market action on this Wednesday, and for that I'm joined on the line by Dr. Hwang Seiwoon, Research Fellow at the Korea Capital Market Institute. Dr. Hwang, thank you for coming on today.
Thank you for inviting me today.
Now, the Korean government is taking Japan off its own list of trusted trading partners in response to Japan's trade curbs. To what degree is this going to affect Japanese companies, and what might Japan do about it?
South Korean companies shipping strategic goods to Japan will now have to submit 5 documents to win individual approval, which is more than the previous 3. The approval process will also take around 15 days, longer than the previous 5. Local exporters also need to go through tougher and longer procedures to win comprehensive approval to ship goods to Japan for a 2-year expiry, shorter than the 3-year period granted for trusted countries. The impacts on Japanese economy and business are likely to be limited, however, though Korea's new export regulation toward Japan is to respond to Japan's retaliatory export restriction. It is not Seoul's best interest to reduce export to Japan, considering South Korea's large amount of the trade deficit against Japan. Seoul's best response would be to rather increase exports to Japan and decrease imports from Japan at the same time. This implies that the new scheme is less likely to be harshly implemented in the approval processes, and Japan is not likely to intensify retaliation in response to Seoul's move.
Well, now, Dr. Hwang, U.S. stocks, to change the topic, you might think would have taken a beating from the attack on the Saudi Arabia oil facilities. But with the Fed Open Markets Committee meeting this week, they were up on Tuesday. Korean stocks up today too. Take us through the global markets.
U.S. stocks ended slightly higher Tuesday, but gains were kept as the Federal Reserve kicked off a two-day monetary policy meeting. Crude oil gave back some of Monday's 15% surge as Saudi officials said they had restored just under half the output lost at the Upquake plant, one of the world's biggest oil facilities. The S&P 500 index posted a small advance, with dividend-paying real estate shares faring best. 10-year Treasury yields fell towards 1.8%, and the dollar weakened after the New York Fed took actions to calm money markets. Stocks in Asia closed mixed as investors awaited the outcome of the Federal Reserve's policy meeting. Equity indexes in Japan edged down, while Hong Kong traded flat. Stocks of oil companies in Asian region mostly slipped in Wednesday trade, following a sharp drop in crude prices overnight after Saudi Arabia signaled its oil supply could return to normal soon. Japan's Nikkei fell 0.18%, while South Korea's Kospi gained 0.41% today.
Now, the Saudi attacks may have clouded the economic outlook somewhat. At the same time, the FOMC's meeting, an interest rate cut has been widely expected. What do you think the Fed's going to do with rates this week?
The Fed's meeting is scheduled to end Wednesday, when the central bank is expected to announce its latest decision on monetary policy. The Fed is largely expected to cut rates by 25 basis points. That would be the central bank's second rate cut of year 2019. While a 25 basis point rate cut is seen as near certain, investors look to the statement and economic projections from Fed policymakers, given signs of deep disagreements among them. The ongoing U.S.-China trade war has raised policymakers' concern about slowing factory output, although resilient U.S. domestic consumption has given hawks some reasons to worry about cutting rates too hastily. With economic reports decidedly mixed in recent weeks, Fed Chairman Jerome Powell must bridge continued sharp divisions among Fed policymakers, many of whom favored no rate decrease in July. The central bank is likely to reiterate that uncertainties about its outlook remain, and the Fed will act as appropriate to sustain the expansion. Any changes to that language would signal some pushback against the expectations of a third rate cut later in year 2019.
All right, Dr. Hwang, we'll see what they say in a day or two. We'll have to leave it there for now. Thank you again for your time.
Thank you very much.